So after a thrashing and bashing of last couple of weeks, finally a week where the stock or the equity market has performed quite well in the last couple of sessions, and this may be seen as a trading bounce back rather than a trend reversal, and that's where you can actually get the market at a place where right now it is trying to make a move, but whether it is for a short term or whether it is a trend reversal is not yet known. So without any further ado, let us just start another session of USA Weekly Market Report series, where we can see how the stock or how the market has performed in the last 5 days, 5 trading session, and what is an indication or what the Wall Street is probably indicating for the upcoming week going forward. So with this, let us just analyze some of the headlines that has impacted or that has an importance as far as the overall stock market or US market is concerned. But before that, if you haven't yet subscribed my channel, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. So the crux, or I would say the important line for this entire video would be, this bounce back may be considered as a bounce in between a correction rather than thinking that a correction has already ended. Maybe for some of the stock it is fine, but for the overall market we need to see. Now, looking at the current press release, I think this headline in which it is saying that Kramer's week ahead, where the stock can't stage meaningful comeback until major obstacles are resolved. So I think this is a fair statement, and we can't say that the market has fully settles down each and every or most of the negative things, and stock has indeed started moving higher, but whether this is simply a trading bounce back, which I think right now it is, and we need to get a confirmation for that, whether it is just a trading bounce back or a reversal. So we need further confirmation, that is yet to be seen. Okay, so I can relate with this press release. Now moving forward, so I think the another important press release, this one, top financials and millionaires are just set up and the mood was terrible. So couple of days back, I think the statement made by George Soros has literally made some big headlines, and when he is saying that things are not looking good, because we know how influential that guy is, then obviously we cannot deny the complete statement. We cannot deny his complete statement. So that's the most important thing we need to understand right now. Apart from that, I don't think you can see a very important press release, because the market has performed quite well in the past 3 or 4 trading sessions. So what we are going to do, let's just move to the stock wall and let us see how the stock or overall equity market or financial market has ended last Friday, to get some cues, and then we will start analyzing things individually. So the biggest fall that has shown is obviously the Nasdaq, where the index overall has fallen by nearly 31%, and as of last Friday it is moved by 3.3%, the biggest. Dow Jones by 1.76%, and a cumulative impact on S&P, which moved by 2.47%. And then again, the good thing is VIX has started moving lower, so this is the good thing, and so does the US 10-year bond yield. So after tested 3.1%, it is now trading in between 2.7 and 2.8. Also, the oil is firm and steady at 115. Now, if you are thinking that oil will come down, so let me tell you that the commodity is in an upcycle and oil is not going to come down, rather it will move higher. Okay, if you are thinking that it will come down, then this is just out of the box context, because we have seen how things worked out in the past, and oil has already tested the lows or already tested the negative territories, and from there it is obviously a multifold rise, those who have traded in the oil. But let me tell you one thing, that we are in a commodity of upcycle and oil is one of them. So do not expect such foolish things as of now, because it will take time for a commodity cycle to get started, and similarly it will take years before it actually ends. Apart from that, the big surprise is from the dollar index, where it has touched the high of 105 and it closed at 101.64. So a big positive surprise, which has definitely helped, because the result you can clearly see as far as Nasdaq is concerned. So we will check, or we will analyze each and every chart individually, but the first we are going to analyze the dollar index, from where we will get some cues about the next upcoming move, which will help us to understand how the equity market probably moves as far as the next upcoming sessions are concerned. So let's directly go to the chart. So this is the dollar index chart, and we can clearly see a correction has started. Now I would like to do, or I would very happy to do, a long term analysis again for dollar index, specifically for dollar index. I would like to make a video if you guys want it, but for that what I want is at least 500 likes on this video. If I receive 500 likes on this video, then I will think of making a specific video analysis on dollar index. I have done in the past, but with the recent price action we have, I would like to do it again, but if I only get 500 likes as far as this video is concerned. So if you are looking at the current price action for dollar index right now, we can see a 3.5% downfall from the top, where it has tested 105. So it has tested the upper end of the range and it has started falling. So technically the range was like this, and right now, you know, if the dollar index started moving higher, and if you are in 1980 or 1990, hopefully that would not be good for other countries, but certainly good for US market. But right now, beyond a certain limit, even dollar moving higher can cause a lot of damage to US economy as well, right? So strong currency is not at all good for them, because of the money that they have printed and the kind of money that is still sloshing in their market. Forget about the other market. Okay. Now if you are looking at the indicator, these are the weekly indicators. Hopefully it has to go down, because the indicators are indicating the same thing, that a downtrend has started, because this breakout as of now looks like a false breakout, but we will get the confirmation only if it started moving or trading below 100. If that happens, okay, if it falls below 100 and started trading below 100, then it would be considered, or this section would be considered as a false breakout, in which case we will move towards or in between the zone of 88 and 89. That would certainly happen. Okay, and that's what we should look for going forward, right? And that has happened from the highs of March 2020 and to the lows of I think June 2021, and from there we have a big and sharp spike, and we have seen how stock market has performed. So we will definitely wait to see that is this is a move towards the lower end of the range, and if this is the thing, let me tell you, you will be surprised to see how stock market can quickly move on the upside. Okay, so the dollar index is a very good indicator, and as I told you, if you want a specific video on this, do give me 500 likes, and the kind of research I am doing, if I get the same thing back from you guys, I will definitely do it. Now the next chart, or I would think the next important chart, is going to be Nasdaq, because it has it is really the index which get hammered like anything. So from the top, as you can see, it has already corrected 31.96%. So this is a very big correction, because the kind of index it is, and the kind or the number of stocks that has involved as far as Nasdaq is concerned are quite big. So if it's moving down, obviously we have seen how the stocks or small stocks have moved, or risky stocks has already lost almost 80 to 90%, or even 95 to 98%. So nothing is left right now. This is very interesting, because the way or the position at which the stock has taken or the index has taken support is very interesting, because this is a no man land. Okay, if you rather taken support at 200-day moving average, which is at or near 10,740, that would be fine, but it has taken support near 11,000 and started moving higher. And right now, as I told you, that this may looks like a bounce back. I would rather think this is a bounce back until and unless we give clear signal. So the level that I am looking here, as far as the bounce back is concerned, is going to be 13,500. So the way this index has thrashed, okay, a 5-10% of a recovery cannot be ruled out from the low. So 8% has already happened, 8 or 9%. Okay, so further recovery cannot be ruled out, but as you can see, I have already drawn the complete trend, and if you are looking at the index, what you can see, that we are somewhere in the middle of it. So we need to see that whether this is the end of the correction or there is something left, because if there is a bounce back towards 13,500, and then we can see some indication that there are some additional risk which is evolving, and the stock market started correcting again, then that will not be a good scenario rather. Okay, so that's why I'm still in a view that the trend or the lines that I have drawn, there is a probability that it will test rather 9,000 or somewhere in between 8,700 and 9,200 before it can actually started moving higher. And if it does not, if this is the low that we have made, then we require some further confirmation, and the next week will hopefully decide the same. Apart from that, the US 10-year bond yield, as I told you, that this is definitely from 3.2 to 2.7, and its sharp move towards 3.1, but it has fallen down quite significantly. And right now, the way it is moving, market will give you indication about the actual thing. Do not just rely on the statements which you receive. Only follow the numbers. You will get a much more clarity about the price movement, and what's being said and what's happening. Both are different things. So if you are looking at this trend, the price trend, so here we are. So here we are. So this is what we have here as far as the trend is concerned for US 10-year bond yield, and already we have seen a resistance near 3.36, and if it does not pass through, then the support that we can see is in between 1.92 and 2% on the downside, and if it successfully moves above 3.36, then it is moving towards or in between 4.24 and 4.59. So that's what I can see as far as the US 10-year yield is concerned. Now about the crude and crude WTI futures. I'm talking about crude WTI futures, and as you can see, this is very clear that it would rather be a fool strategy to go short on oil, because oil, by any context, the fundamentals of the oil and the supply demand scenario, and if I don't understand those things, then as far as the price movement or the oil chart is concerned, this is not at all showing any sort of downtrend or any sort of weakness in the chart. So if crude WTI futures continues to sustain above 108, then the next probable target would be, it has already touched 130, it can go somewhere in between 130 and 150 again. So that's a possibility which is still there as far as the long term chart of crude oil WTI futures are concerned. Right now, what will happen as far as the next week is concerned? So for that, let me give you the analysis of Dow Jones as well, because it's a recovery that we can see from after being tested the 100-day weekly moving average. So even if you are watching the price chart of a Dow Jones, although it has tested or it has started moving higher from its 100-day weekly moving average, but if you are looking at the chart, it would be better if the correction happened till 29,500. That would give us a better confidence, because right now what we can see here, or as far as the trend is concerned, right now whatever we can see is just a bounce back which is happening from the middle. Okay, so if this is the case, if the bounce back is happening from the middle, there is always a possibility that the bounce back, if things get wrong, then it will fizzles out, and you will see a meltdown again. So that's why I am not ruling out that there is a possibility of 29,500 as far as the upcoming move is concerned, neither in Nasdaq nor in Dow Jones. So there is a probability that some more correction may prevails if things or something which is not yet known may re-emerge into the market or emerge into the market, but the chart is indicating that the correction or the complete correction is not yet over. The only respite is going to be the surprise from the dollar index. If dollar index continues to move lower and if it falls below 100, then it would be a very big surprise for the equity market, and you will see a great recovery moving ahead. So this is the end of the video. Thanks for watching.